Yeah, for sure, because influencer is usually like a good launch event, if we use that language, but it cannot be your permanent acquisition vehicle, because at some point, obviously, you're going to exhaust their follower base, and like you said,
very good point.
The ICP of your ICP within their followers is also going to be like that big.
Yeah.
And like you said, they're not going to convince somebody who is not an investor today to start investing just because they said it.
No, but I think you bring up a very, very fascinating point there. For other people who may be wanting to work with influencers, because this is something that we are strategically looking at when we work with someone. If the influencer is not growing their channel, then you're basically exhausting the account or the followers within 9 to 12 months. Then
exactly.
If you do not manage to convert whatever you need to convert from that influencer within 9 to 12 months, then you're not going to get it the second year.
Exactly.
This Adrian Søbyskogen, two-time founder, now GP and CEO running Akka, the platform putting regular people into the pre-IPO deals. The growth engine's working.
When I first entered Akka and was gotten familiar with the numbers, is that just because you're a big influencer does not mean that you're able to convert your followers to whatever you're promoting, especially not this. So we see...
Yeah, because it's sensitive product.
Sensitive product, and just because whatever name says that you should do this, if it's too far away from the reason why I started to follow you, then I don't feel any urgency, or why would I listen to you talking about this? So that is why we are now building the heads of regions like myself to be superstars, TV stars, because if we talk about the investment, the startup space, entrepreneurship, and the followers join us, then it's easier to preach and convert.
And I'm about to tell you why it won't last. Welcome to the Scale.
All right, everyone, welcome back to the Scale Room. If you're new here, remember, this is a live brainstorming format. It's not an interview. And today, I actually have a super interesting sparring partner here with me. As a reminder, I'm your host, Olya Grovel, 4X CMO, 1X founder, X PayPal. Obviously, I have to throw that one in. And today, I'm back with the founders who are trying to scale to 8 figures and basically help them identify the scaling bottleneck. Today, here with me, I have, let's call him, I'm trying to search for really good...
Yeah, what should we call him?
I think his profile is a very interesting symbiosis of actually 3 different things. So he is a former founder himself who had a private equity exit. He is a GTM expert and has an agency dedicated to that. And cherry on top of that cake, he is also an investor. So imagine I'm actually outnumbered here. Adrian, please introduce yourself.
Yeah, well, thank you so much, Olya. So I've been in the startup entrepreneurship space for 15 years. But prior to that, my career started actually when I worked in London for a couple of years. I worked at Gartner. And then going from consulting into the startup space, I co-founded my first company in 2014, was acquired by a private equity firm in the Nordics. Then founded a big marketing agency in Oslo, Norway. And then after that, did another startup journey. So 2 successes, I would say all 3 successes, but 2 exits, which was positive. And now I'm the general partner and CEO of Akka in Northern Europe, leading our initiatives here. So super exciting. And thank you for having me on.
Of course, my pleasure. Let me actually have a pivot question real quick, because I haven't thought about it, but now that you mentioned that everything is in the Nordics, is that like a typical journey for somebody in the Nordics, or are you more like an outlier? Like, how is entrepreneurship being seen in the Nordics overall?
No, I would say that's definitely an outlier. You always find examples of people going abroad and having you could say the type of career that I've had so far. Not to sound too cocky, but in the Nordics, we are very limited by, I would say, the system that we have. I'm not saying that we are complete socialists, but the system is very difficult for breakout founders, especially in Norway. Sweden is a bit different. Many unicorns coming from Sweden. So I would say definitely an outlier. You don't find that many who have this type of journey. But also there are some really great founders in the Nordics. So I just want to say that. But yeah, I would say an outlier.
Right. Any like super well-known Norway unicorns that you can bring up?
Oh, I wouldn't say super well-known Norwegian unicorns. There are a couple of them. Obviously, from the way I look at it, because Norway is such a small country, like 5 million people. Look at Nordics as one region, and I would like if you look at Sweden now, our neighbor country, the most important company there at the moment is obviously Lovable.
Right.
With Anton leading. So I would say even though I'm not Swedish, I'm really proud of that from the Nordics.
Has the neighborship, right?
yeah.
But you said 5 million, I was like, oh gosh, it's like one neighborhood in New York. I didn't
Yeah.
like when you put it on that scale.
yeah.
Akka app, do you think it has the potential of being the next Norwegian unicorn?
Well, Akka, it's important to say that we have operations in Italy, Spain, and in the Nordics. So we don't operate as a Norwegian company. We operate as actually a French company.
Okay, welcome to my territory.
Yeah. But Akka, I mean, I can't disclose too much on what's going on behind the curtains, but I could say that I would be very surprised if Akka is not becoming, on paper, one of the new unicorns coming from Europe in the very near future.
So for anyone who doesn't know the product, can you give us like a 30-second pitch?
Sure. So if you have some exposure to investing today, you've been investing in stocks. I'm sure many of us have been wondering, so how do I get access to the companies before they go on the public exchange?
IPO, yeah. Mm-hmm.
Yeah. So what Akka is doing is that we operate as VCs, traditional VCs, and we curate one deal for our members across Europe, and we present a startup investment opportunity once every 2-3 weeks. And then our members can choose to either jump in or wait for the next deal. And you need to have a membership to have access to the deal flow that we present.
What's the lowest ticket?
300.
All right. That is super accessible.
Yes, very accessible. And we provide either a startup deal, which is the typical early stage scaling phase company, or a pre-IPO deal. So you can think of Anthropic, Epic Games, Perplexity, etc. So very exciting stuff.
Yes, I think it's a massive opportunity actually for investing into companies before they go public, but also you don't have to be like a true angel investor to be able to invest. Like you don't have to write 6-figure checks.
No, I mean,
exactly.
because I remember, Olya, like 10 years ago, even though I was in this startup space back then, getting access to invest in great companies, even though you have a little bit of money, you don't have that type of deal flow.
Right.
Because
you would never have access to it, yeah.
Never have access. So even if you have money, you don't get the type of deal flow because you need network. And even if you don't, or even if you have the network, you might not have the reputation, so people don't like you. So
right.
It's like, very difficult, yeah.
Nobody wants a random person on their cap table, right?
Right. Yeah.
So how, like, I guess for anybody who also doesn't understand the logistics of it, then you act as, what is it called? Special vehicle something, basically when you accumulate all of the teeny tiny investors, but you're still kind of like the shell that puts it all together, right? Just for everybody who's not very familiar with those logistics, can you explain it in like down to earth language?
Yeah, sure. So we have 3,000 plus members on our platform. Every 2 weeks, we present a startup investment deal. There are those 3,000 members, let's say, in the Perplexity deal that we just had, 1,000 members wants to invest in that deal. Obviously, the company that we are investing in do not want 2,000 new investors.
Right.
So we create an SPV, just like you said, special purpose vehicle, basically a holding company with the sole purpose of being invested into whatever instrument we are investing in. So all members that are investing becomes a shareholder of that SPV, and that SPV is investing into the company. So they only have one line on the cap table from us.
Is there a special vesting schedule that comes along with it?
No.
Okay.
So just standard terms.
And basically sit and wait for the exit event.
Yeah, you wait for either an IPO
Mhm.
or the company gets acquired, or what's really interesting is a secondary transaction. Another investor wants to buy out our position because
Okay.
like we invested in Anthropic a year ago, and now I'm getting calls every single week from investors all around the world trying to get in on that deal because they don't have access and they want to buy us out.
Oh, that's a good one. And I think you mentioned last time we spoke that you guys now have partnership with Y Combinator.
Yeah, so we have a partnership which gives us access to Y Combinator, meaning Y Combinator has 40,000 companies applying to the accelerator program. They pick less than 1% of those 40,000 companies, of about 400 companies per year, once per quarter, 80 to 100 companies. And out of those semester batches, we select 5-6 companies and we invest in those. And our members can now invest in those batches, which is insane.
I mean, this is really cool because this is probably the most gated community out there.
That's a very good point, actually. Yes. I would say if you are into startup investing, the one place you do want to be is in those circles. Like everybody is scratching on the doors to get in. Highly exclusive. Yeah.
So you mentioned there is a membership fee to even get access to be an investor on your app. What else is coming on top of the membership fee?
Yeah. So let's before I give you the actual fees, let's just compare to traditional VC funds first.
Sure.
Because I think from a retail perspective, like if you're a smaller investor, you only compare it to what you know, and that is if you open up your brokerage account like Robinhood or whatever you are in Europe, you see that okay, I pay like €5 to make a transaction and that's it. But the energy that it requires to curate a startup deal is so much higher than if you're just buying a stock on the stock market. Hence why it has some fees to it. A normal VC fund, if you had €100,000 and you invested that into a VC fund, they have a model called 2 and 20. So you pay 2% management fee for the lifetime of the fund, which is usually 7 to 10 years. So basically there's 20%, 15 to 20% that goes directly into management fees. And then on top of that, when the fund is closing, they take 20% of the profits.
Oh, the cash out, okay.
Yeah. Now, the way, since Akka is not handling your money, we do not take upfront money. So we need to have a different type of business model in order to get this train going. So we have a membership where it starts from €39 per month, or you can pay upfront by the year and it's a little cheaper. The different types of membership is different in terms of how much you want to invest per year. So we have a cap in those membership packages. So that is one thing. You get the membership free for lifetime if you have been a member for 3 years and invest 10 deals within those 3 years. Secondly, the standard fees are 5% structuring fees. So that is for us curating the deal, and then 5% management fee to handle the SPV. So you can expect 10% to be taken out from your investment, and then we have 15% performance fee. All in all, it's pretty much the same as a VC fund, but you don't have access to VC funds as a smaller retail investor.
Right. The question about the members, do you curate them or can everybody become a member?
We screen members. So you cannot go on akka.app and just sign up to become a member. You can ask for access and then you will have a call with me or my team. And then we ask you these typical questions if you understand the risks and whatnot and your investment range. And we see if it's a good fit or not. Most of the time, it's a good fit. But if it's not, then you're not invited, even though you want to pay for the membership.
The other way around, you mentioned that you screen about 5,000 companies every year and only about 15 of them actually make a cut. What's give me like the typical kill filters?
Yeah. Well, if we look at the different categories, like pre-IPO deals is something very different than to typical startup scale-up deals. And it's much closer to 20 deals per year. I would say the typical deal kill would be a founder that has not been in the space before, and there's no direct correlation between the problem that you're trying to solve and the experience you bring in. You might have a great idea, But if we don't believe that you are the right person, then that's an obvious red flag for us. And we would not, even though the team on paper and the problem that you're trying to solve is great at first glance, since it's early stage, we invest in the founder's ability to handle those problems and scaling issues and whatnot. So if you cannot demonstrate that track record, we're not investing. So that would be the obvious number one red flag. The other stuff is we do our best to see, yes, you might have a great person, you might have a great idea, but you could be 5 years too early. And if we feel that there's a difference between what the founder is saying the market is operating and our own market research, and by asking our VC friends in the space, we would say, hey, we love the idea, but it's just not the right timing. And that happens all the time as well. So those are two normal examples.
So outside of the SPV, do you guys have a standalone fund where you would just directly invest into companies?
No, because we are regulated as a crowdfunding platform, which means
that's why the French AMF thing. Okay, I saw it in my quick analysis. Okay, yeah, I'm very familiar with them because I did work for French Fintech, and getting that license was an absolute nightmare.
Yes, it has been. But yeah, we are regulated as a crowdfunding platform, which then practically means that we are not allowed to invest on behalf of you, but we still curate the deal, so you make the decision. So when you're a member, you say yes this month and you say no the other month. So we don't handle your money that way. Yeah.
What's the typical profile of your members today? Is it like tech founders trying to invest into other tech founders?
Yeah. No, I am actually what I experience is that the tech founders I'm trying to evangelize to get on board to Akka don't have the money to do so because they have invested everything in their own idea, which is great. Great. Yeah.
But they're too poor to invest in somebody else.
Yeah. But the normal profile, I would say, I mean, it could be people like myself and other just regular people who have had some exposure to the stock market before. Maybe some of them are a little bit more advanced, having tried crypto, etc. But they're normal, regular people who don't have 100k euros liquid that do want to invest a little bit from their salary, and they want to get in on this new asset class which they haven't had access to before. So regular people, I would say.
All right.
Yeah.
Which I think brings us to the whole acquisition dynamics question. So as far as I understand from my notes, you had John Olson, who gave it a really nice push from the very beginning because he has quite a few followers on Instagram, actually over 1 million at this point.
Yeah.
But so basically did you, let's call it ski on that one for a little bit, since we're just talking about skiing, and how did you turn it into a repeatable process afterwards?
Yeah. Okay. So now we are getting into the fun part. When Akka began, the strategy, and that's 2 years since now, this strategy back then was to have an influencer-led growth model. So in the Nordics, it was Jon Olsson, and in Italy is Giorgio Chiellini, and in Spain we have Pedro Buerbam. I'm sorry, I'm botching his name. So the thesis, the hypothesis we had back then was that...
Are they all former athletes or not?
Yeah.
Okay.
Yeah.
Okay.
Yes. But the hypothesis was that they have a great... they have done fantastic stuff in the past and they have a huge audience. And that worked and is still working. But we also realized that when we are growing so fast, it is important that the members have a face of the region. Yeah, at some point it was necessary to have a face of the region because when we get so many new members, obviously they cannot interact with Jon Olsson because he's not here on the day-to-day operation. So that's what we saw, that, okay, we need someone with boots on the ground, and we are not moving away from using influencers and ambassadors, but we are now hiring our own people and making sure that they can become the superstars. And that's how we got introduced, right? Because I started the Instagram channel and that's part of the strategy.
Yeah, it's clear now. Yeah, it's very clear now. And I think it's a super intelligent move because then you're totally democratizing and creating awareness at the same time. Because let's be honest, it's not, like you said, just a regular person making a little bit more money. I'm not going to know that this is even a possibility. Like in a regular person's head, it's like, you don't know what you don't know, right? They wouldn't even be like, they wouldn't be Googling this.
No, and I mean you know this yourself coming from the finance industry, that talking finance and just making this idea and these stories accessible to the everyday person extremely difficult, because you always have to balance talking about the subject which is highly regulated,
right?
And you also need to balance the fact that how technical can you be before people don't understand you anymore? So extremely difficult. But I think the way we are trying to operate it now, and I would love to hear your thoughts around it as well, is the best fine balance between entertainment and what is this? I'm curious. And obviously, it should have a compounding effect down the line.
Right.
In the beginning, everything is new and you need to build trust. And yeah, it's an exciting. I'm curious to hear your thoughts around that, since you've been in the finance industry yourself.
Yeah, so I would say I see it kind of like a dual layer thing. So on the very surface, like on the biggest layer, you're just really battling with the overall, I guess, attitude to investing. Like if you look at the stats of how many, like let's call them adult population and different countries actually invest, as in, I'm not talking about like savings, all this like classic stuff. It's like this much.
Yeah.
When I was working for a French fintech and we were looking at the stats, I don't wanna lie because that was a few years ago, but I think it was like 10% of the adult population was actually making any sort of retail investment. So either index funds or buying the shares of IPO'd companies separately, or considering crypto. But crypto is like next level, right? I'm not even putting that one in. So your TAM, the total approachable market, is already pretty small, right? Because you're not going to convince somebody who is not even investing yet to do this, because there is just going to be so many questions, so much fear, because fear is the first thing that gets attached to investment, because the first word that comes to your mind is risk.
Yeah.
Like, am I actually going to get my money back? Like, am I going to lose money on this? So you're battling with this whole thing, as in like your market is actually pretty small. What you have to do is you have to take a piece of that and bring it into your app, versus, like you said, Robinhood and any other, I guess, super mass market apps. And so the second layer would be basically presenting it as an opportunity versus a risk, as in, hey, as you said, we are not just some common marketplace that puts everything available on it. We curate it for you, which already, again, the language is like super sensitive, like takes away some of the risk, because we actually have done our due diligence. We have repeatable process, blah, blah, blah. So it's not a de-risked investment, but it's a high potential investment. Then people who already investing start thinking, okay, yes, maybe. But then again, are you approaching people? And this is my question back to you. Are you positioning it as like a mid-term opportunity or more like a long-term opportunity? Because most people that are investing, that doing retail investments today, are doing it for like long-term. As in, I'm just going to continuously put money into index funds and I'm going to cash out 20 years from now. And who cares what happens next year or the year after? Because 20 years from now, I'm guaranteed to have some good returns.
Yeah, that's an interesting take. And a fun question, actually. I would like to very soon play it back to you, because I haven't done my research, quick disclaimer, on this statistic. But my take is that most people don't have the patience for long-term investing. And when they are investing in crypto and in stocks, it's so easy to like, okay, I buy it now and then I sell it next week. Like I saw this statistic in my gym here in Oslo area. Where it said that as in small Norway, there are now 73,000 fewer crypto investors compared to last year.
Oh,
meaning all of those guys, they have exited their investment. So there's no long-term perspective there. If you're going to lose like 73,000 investors. So I think without knowing the entire research and statistics about how long-term retail investors are investing, I would say that most people don't have the gut to think long term. And that is one of the entry barriers of startup investing because it's illiquid. You can't just buy a piece of a startup and say, hey, I would just want to sell it the next day.
Right.
But the people, and that's also why we need to screen people when we get new members so that they understand, hey, if you invest in 10 companies, you might not be able to exit your position for the next 2, 3, 4 years. So I would say that the members that we get in Akka, they really understand the long-term perspective and that the investment is illiquid for a period. What we tell our members is that if you invest in pre-IPO companies, our investment thesis and conviction of the exit strategy is always that the IPO will happen within the next 12 to 36 months, usually. That doesn't mean that it is a promise, but that means that for this particular deal, pre-IPO, we think it will happen within the next 12 to 36 months. Now, for a startup deal, I mean, the exit strategy has so many different possibilities because you have acquisition. Yes, you have an IPO, but that could be far, far away. You have the secondary transaction, and that's normally, in general, that is a longer horizon than an pre-IPO opportunity.
What's the overall composition of portfolio today, if you can disclose it? Like
Sure.
the pre-IPO versus startups.
The deal flow that we have now is 50% scale-ups.
Okay.
So it's important. When I say startup, I mean these are companies.
Early stage.
Yeah, these are early stage. Okay. And for us, that is not companies valued at like $10 million. We're talking 100 million and less than a billion. For us, that is the early stage scaling phase companies. So 50% and 50% pre-IPOs. So a billion, 10 billion upwards. Yeah.
When you adjacent question to that, when you interview the founders, is one of your questions going to sound like, hey, are you trying to exit or what? Because surely there are founders who are not trying to exit, who just want to, build a sustainable operation. So is that one of your screening filters?
Not, I would say so, Olya, because, the founders...
Because you have to guarantee the liquidity in some way or another.
Sure. But the founders that the founders that we are talking to, and in this space, when you talk to repeating founders, when they're asking for venture capital, you don't need to say out loud that, hey, we want to make money. There needs to be an exit here. We're not talking about, hey, do you want to make money or not? But when we do secondary transactions, so then we're not talking to the CEO of Anthropic. We're talking to an existing. It can actually be 2 layers. We can talk to a broker between us and the seller of the company. Okay. And then when we do it, this is very different from investing in startups, which might be interesting. When you do a secondary transaction, you risk actually getting less information about the company because the information you're getting when you're doing a secondary transaction is on the burden on the seller, not on the company. Because it's not a equity round. It's just a secondary transaction. But when you do a direct transaction with a company in an equity round, the company discloses everything about the company. But when you do a secondary transaction, we don't. So then we talk to someone else. But in short, Olya, yes, for the pre-IPO, then we talk to the broker, the seller. What do we think about an exit? Yes, we have whatever information. We think they will do an IPO in 2 years.
Makes sense. So let me make another follow-up question on that, because, I'm thinking back to my retail investment experiences as well. It's like you said, a lot of people don't have the patience to wait so much, blah, blah. And so what happens a lot of time, actually, it's like the user behavior in retail investments, that they would move the money around. Let me drop this, or rather dump, right? Let me dump this, let me take that. Is that a possibility on the Akka app right now? As in, can one member potentially, swap with another member to free up their own funds and buy something else?
Not yet, but we have that on the agenda for this year. Whether or not we are able to pull it off or not is another question, but we are looking into that.
Because that's a little bit of the retention dynamic here.
Yeah, I understand. But at the same time, if you're into investing, Charlie and Warren Buffett have been screaming for 100 years, literally, that just stay in the game. Don't time the market. It's so, yeah. But that's something that we are looking into. But as you know, in the financial industry, Olya, the moment you open the opportunity that two parties, individuals, not professionals, do a transaction between them with financial instruments, there's some new regulation you need to consider.
For sure. Yeah.
So we're looking into it, and I'm sure we will find a way where we don't need to. Yeah, we need to comply.
What is currently, I guess, like the repeat investment ratio within your membership base?
So normally our investors, they do about 7, 8, 9 investments per year, and I can't disclose the average sum, but the minimum investment is 300 euros, but they invest in 40-50% of the deals that we present in total. I mean, it's not like a deal we are presenting does not get funding. It's just that one person gets 20 opportunities, he or she invests in 7 to 9 of them.
Do you have any sort of referral investors?
Yeah. So if you are a member now, you refer someone, you get credit on your account. But I think if we are to talk about the go-to-market strategy of this, I think I really want to like play ball with you here, because I'm happy to share how we are oiling this machine. If you want to go there, like
I even have an idea that I wanna run by you, but you go first.
Yeah. So let me firstly share. So how we are doing this? We try to build a brand around the Akka, and we do 2 things. We sell the dream that you can invest, and like everyone else, you can invest, and then you can see some returns. With obviously disclaimer that investing is high risk and etc. And then we do a lot of educational content, so helping you understand how investing works. And then this is one of the things that we are extremely good at, is doing live webinars. So we have started doing this 3 months ago, investing extreme amounts of money in ads, attracting potential people for the webinar, a system of emails, WhatsApps, social media follow-ups, etc. And then this 60-minute masterclass on the webinar. Then we have people scanning a QR code in the webinar to sign up for a call with me or my team. And then we decide, or then the potential member decides. And that machinery, that happens every single month now. And yeah.
That's a classic move. And as a GTM operator myself, I'll immediately challenge you on that one to ask, do you ask those people who participate in the webinar whether they're currently investing or not, retail investments?
Yeah.
Do you have the ratio, like the success ratio of current investors converting into Akka investors versus non-investors converting into Akka investors? Because that could be interesting.
Yeah, I don't.
You should look it up.
Yeah, based on my experience from the data I've seen and the interaction I've had with both members and potential members, is that a majority of members has obviously some exposure to stocks or index funds today. A vast majority have that. I don't have any anecdotes or reflections around members investing in that. Startup investing is their first like asset class. I don't.
I think that's an interesting data point for you to dig into, because, and this is from my experience, it's like there are 2 people that you can approach today, right? The ones that are already investing and the ones that are on the verge of investing. And this could be their first asset class. But then again, for me, this is like this is like niching down into ICP. And since you're dealing with the European market, which is extremely fragmented in what we call money psychology, right? A French retail investor is going to be wildly different from Norwegian, from Italian, from German, etc. It's just like such different personalities. For example, here in France, bank is the king. As in, if your banker tells you, hey, Olya, I actually have a really cool, you're investing into this shitty little stocks, and I have a cool opportunity for you today. I'm not French. I'm just, simulating the scenario. I would be my husband, who is French, would be all ears, because the banker is like the god for him, like managing everything for them. And I've heard, for example, that in Italy, it's a completely different story. So I think you need to definitely like take a super deep dive into what I call the money psychology, as in who is the champion for each nationality. Is it their banker? Is it, I don't know, their mom, their employer? Like, who is the one managing or influencing their overall financial decisions? And this is your entry point, because a lot of times you don't even have to go directly to the person. You can just go to the champion. Same way as you're using the influencer strategy. But this way, you're actually going a level deeper. And instead of just relying on the influencers who have this blanket coverage, you're going to the people who influence maybe a smaller group, but they literally have their minds. Like,
Yeah. No, I see that. I'll take you up on that idea. I'll bring that in internally, because we are extremely data driven. Like everything we do is about data, to the point where I'm almost frustrated sometimes, because I come from a background where it's about branding.
right.
All the beautiful colors and energy and all that, and you cannot measure anything, because it's about what your potential customer is talking about with their spouse around the family table. That's how you measure if you're inside their head or not. But this data point is for sure extremely interesting. It is, and I would say also there's a cultural difference as well. I mean,
Oh, for sure.
Like you were pointing out, doing this in the Nordics is, I mean, I have some colleagues from Spain and Italy who has tried to do something in the Nordics, but if you come in as a Spanish guy or Italian guy trying to talk about or trying to sell dreams to the Nordics, this is a scam. I don't believe you, because this is too much, right?
Right.
So they need someone who is somewhat blonde and is a little bit more humble, where they can connect a little bit more.
Yeah, I see that. No, for sure. That's why your original influencer strategy makes a lot of sense, because you have the approachable personality that people can actually relate with. So there is this, like, I don't know, trust level that is already established, plus an athlete. It's not like some showbiz personality, which would be like wishy-washy, you know. But athletes, I feel like they have this level of, I guess, trust, for the lack of a better word, with people that know that those people have certain, I guess, morals, because they're an athlete, right?
Yeah.
So that would mean that they would probably not back a brand that is trying to scam people.
No. I agree. But you would be surprised, or maybe you're not surprised, but at least it did surprise me when I first entered Akka and was gotten familiar with the numbers. Is that just because you're a big influencer does not mean that you're able to convert your followers to whatever you're promoting. Especially not this. So we see...
Yeah, because it's sensitive product.
Sensitive product, and just because whatever name says that you should do this, if it's too far away from the reason why I started to follow you, then I don't feel any urgency, or why would I listen to you talking about this? So that is why we are now building the heads of regions like myself to be superstars, TV stars, because if we talk about the investment, the startup space, entrepreneurship, and the followers join us, then it's easier to preach and convert.
Yeah, for sure, because influencers usually like a good launch event, if we use that language, but it cannot be your permanent acquisition vehicle, because at some point, obviously, you're going to exhaust their follower base, and like you said,
very good point.
The ICP of your ICP within their followers is also going to be like that big.
Yeah.
And like you said, they're not going to convince somebody who is not an investor today to start investing just because they said it.
No, but I think you bring up a very, very fascinating point there. For other people who may be wanting to work with influencers, because this is something that we are strategically looking at when we work with someone. If the influencer is not growing their channel, then you're basically exhausting the account or the followers within 9 to 12 months. Then
exactly.
If you do not manage to convert whatever you need to convert from that influencer within 9 to 12 months, then you're not going to get it the second year.
Exactly. Let me plant the last seed of this conversation, because I'm a huge fan of strategies where you basically, I guess some people could call it account-based management. I call it like batching or bulking your go-to-market strategy. So what I'm thinking, and again, this is a hypothesis based on my previous experience, is that you could actually have a B2B2C strategy, as in you could be approaching bigger companies to say, hey guys, you have shit ton of C-suite people and mid-level managers who are clearly very well paid because you're an X, Y, and Z company. We have this offer. If you champion this to your employees, we'll give you a better deal compared to everybody who just comes to us without being passported by a bigger company. So this gives you like a nice layer of companies that you can approach with a repeatable strategy of saying, hey, IBM, we know you have X amount of managers who are definitely investing elsewhere. And now I'm judging a little bit more from like American mentality perspective. It's like 1K and everything that's related to it is like a standard of living in the US. Like everybody invests to some degree. So I wonder if there is a strategy like this where you can approach companies who already incentivize their employees to invest, and you can just simply give them another product. It's a no-brainer for them. It makes their employees feel special because all of a sudden they're like, whoa, cool. I get to be an angel investor because IBM championed this for me. And it gives you such a low-level CAC and a much better TAM, really, like much more concentrated.
Yeah. The way I see it on that approach in the sphere of Akka is that it would make more sense if, and it doesn't need to be like mega companies, but it would make more.
I was using IBM as a cliche example.
Of course. But I would say that it could be a employee perk if your employer is a subsidiary company, which is basically a holding company, and you say, guys, in addition to your normal perks, we are going to set aside X% of our profits each year, and every single employee will have a share of our investment company, which we will, and our deal flow will be X, Y, and Z and Akka, and that will be one of your perks. That would, and then the company could do that without opening up for new shareholders in the core business.
That's true. Yep.
Yeah, but you share part of the
pot.
Of the pot where it gets invested into something else.
Exactly.
Yeah.
Exactly.
Yeah.
So this is something for you to experiment with.
Yeah, I'm very excited. That is a cool idea. I'm going to bring that to the management team. Yeah.
Awesome. All right. We're getting to the end of the conversation, and I always ask my signature question. Is there one truth or something that you know today that you wish you could have told your younger self like 5 years ago that would have significantly changed, I guess, the flow of your life?
Yeah. That would be to double down on being young, like using the leverage you have of being young, because unless you're meeting complete idiots, every single person wants to help the younger version of themselves. They want to be seen as Mr. Miyagi, Daniel-san and Mr. Miyagi. So that is something I did not do enough of, not in a manipulating way, but I should have doubled down on just being young and hungry.
I think I could really relate to that one because I didn't, I guess, like jumpstart my entrepreneurship journey until I already had 2 kids. And believe me, the velocity is not the same.
True. Yeah.
So that's a really good one. So to the younger people listening, please like milk being young as much as you can.
Yeah. No, I agree for sure.
What's the best way for people to get in touch with you or to apply for the membership on Akka?
Well, first, let's just start by checking out the Instagram. Connect with me on Instagram or on LinkedIn, Adrian Søbyskogen. You'll find me on both sides.
I'll tag you.
Yeah. And then if you're curious about Akka membership, then obviously just send me a DM and we can have a call.
And for anyone who hasn't seen Adrian's Instagram yet, he does a lot of really cool content that is part parody, part actually real stuff. So I'm sure you'll enjoy it. And we actually even have a collab coming up. I'm not sure on the timing of the release of this episode, what's going to come out first. But check out his Instagram and you'll find a lot of good content there.
Appreciate it. Thank you.
Thank you for the conversation, Adrian. I really enjoyed it.
Me too. Thank you.